Thanks for clicking. The London and St. Thomas Association of Realtors, LSTAR, released its data for the month of March yesterday, showing an upsurge in sales and prices. The increase in prices falls well in line with what we saw last month when, for the first time in a year, London recorded an increase in its average price. Yet this comes as London made a list as one of the top 10 most affordable cities in Canada, according to a widely publicized Edmonton Homes report. But with the upsurge in prices over the past few months, is that still the case? With prices increasing but mortgage rates dropping, is London still as affordable as it was last month? So what I want to do today is go over London's real estate data for the month of March, take a look at current affordability, and then discuss what to look for next. Speaking of next, the Bank of Canada is set to make its interest rate announcement next Wednesday, and we'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home, which represents the most popular set of features. The benchmark price was up in March. In February, London's benchmark was $583,500, and that bumped up to $592,600. So that's about a $9,000 increase in the month of March. And the average price in London also bumped up, though a bit more significantly. The average price in February was $614,200, and that bumped up to $631,358. So that's about a $17,000 increase in just March alone. But the median price, on the other hand, actually decreased. The median price of a home, if you'll remember, that's where half as many homes sold over that price and half as many sold under. The median price of a home in London in February was $588,600, and that fell by $8,600 down to $580,000 in March. So unlike the benchmark and the average price, in March we saw an $8,600 drop in the median price of a home in London. Next, the sales to list price ratio, the SLPR, which measures how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $105,000, the SLPR would be 105. The SLPR in February was 97.5, and that bumped up a bit to 98.6 in March. So on average, homes are selling for 98.6% of their asking price. So homes are still going for under asking, though not as much as they were in February. And finally, the months of inventory measurement, the MOI, which measures if no more homes came to market, how long would it take for London to run out of homes for sale? And that measurement was down in March. The MOI in February was sitting at 2.5, and that measurement was down to 1.7 in March. So if no more homes came to market, it would take 1.7 months for London to be completely out of homes for sale. So in summary, we have a benchmark price down about $9,000. We have an average price up about $17,000. We have a median price that's down about $8,600. Homes are selling for less under asking price than they were prior, and we have a bit less inventory on the market. But how has this affected affordability? With higher prices but lower mortgage rates, is London's real estate market any less affordable than it was last month? Last month, we looked at London's affordability when the average house price was $614,000, and using an interest rate of 4.99 with minimum down payment requirements gave us a payment of $3,491. We also found that buyers had to earn $150,000 to get that average house. Fast forward to this month, and mortgage rates have dropped by nearly 0.5%. Using a $631,000 purchase price with minimum down payment requirements and a 4.54 mortgage rate, mortgage payment is now sitting at $3,428. So about a $70 decrease since this point in time last month due to lower mortgage rates, even with the higher cost of homes. Further, buyers would still need to make about $150,000 per year to afford that average home, depending on the property taxes. So, prices have increased from this point in time last month. However, due to lower interest rates, affordability remains relatively static. It remains relatively the same, if not a little bit cheaper, except for a higher down payment required. With all of that said, whether or not London will be able to sustain this recovery remains to be seen. Bond yields and mortgage rates are down, due in large part to the banking crisis that we saw in the US. It's not clear as of yet if the Bank of Canada will be able to maintain its hold on interest rate hikes, and with the problems in the US looking, at least for now, like they're subsiding, we could see bond yields shoot back up, and as such, mortgage rates would follow, putting more downward pressure on the real estate market. As always, no one can accurately predict the real estate market. There are too many unknowns out there. The best time to buy is when the price is right, when it fits the budget, and when it's right for you. We'll obviously continue to track London's real estate market on this channel. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.